Portfolio Manager at eNCA Capital, Martin Smith, joins me now to discuss today's movements further. Martin, as always, thank you for your time this afternoon. Let's start with the overall markets, with a particular focus on the global catalyst, the Federal Reserve announcing that it's in no hurry to increase interest rates. And this, of course, will happen after it tapers off the bond sales or the bond purchases that has been happening.
Yeah, absolutely. I mean, it was a pretty lackluster session out there until about 4 o'clock. We started to get some messages out of Jackson Hole. And like you mentioned, Powell was speaking about the fact that interest rates are going to be lower for longer. But importantly, tapering is going to start, and it might be appropriate to start tapering by the end of this year. So you saw the markets kind of react to that. Specifically, you saw the dollar weakening, which a little bit surprising in some ways because there's lots of moving parts, but you saw the dollar weakening and you also saw commodity prices rallying on the back of that weaker dollar. So quite an interesting last hour of the day on the markets.
Right, let's get on to some company news. We'll start with my top story, Massmart. They're releasing their numbers today. I mean, they are still struggling despite some progress that they've made. And I just want this to be a forward-looking response, Martin. They've sold the cash and carry businesses. They are going to be buying one cart, so ramping up that online exposure. Your thoughts on Massmart, I mean, just based on what we've seen happen with it?
So I think you used two really good words there. You used the word struggling, you used the word progress, because I think that's kind of the story of Massmart at the moment. So new CEO came in about 2 years ago, and he's tried really hard to turn the business around. They're doing the right things, like you mentioned, that one cart potential acquisition happening, which will move them more into the kind of the online space. Only about 2% of their business is online at the moment. And the sale of kind of non-core assets or loss-making assets, such as Cambridge Food, which you mentioned, they've raised about 1.4 billion in the last couple of months. So doing some really good things, but then you look at things like the macro, the impact of COVID, also the riots, the looting that we saw last month, also having quite a negative impact on them. They mentioned that they're not going to be fully covered for that. So it seems like there's one step forward and one step back. So a little bit of posturing at this moment in time. I'm happy to sit on the sidelines. It looks like they're trying to do the right things, but the turnaround is still taking a little bit of time.
Yes, so when it comes to that violent unrest that we saw a while ago, the company indicating that it lost over 1 billion rand. Let's move on to Discovery now. So their trading update indicating that the pandemic hit them worse in South Africa than it did in the UK. And recovery is going to be very difficult.
Yeah, absolutely. And I think Discovery, let me first say, is a business I really like. The management team is incredibly entrepreneurial and innovative. But I do want to see a little bit of kind of earnings momentum come through the next 12 to 18 months. I think, obviously, with COVID, we need to see how that all kind of unpacks itself from a vaccination perspective, how the Delta variant also kind of plays out. And importantly, to look at kind of how their life business kind of fares post-COVID. I mean, they had provisions of about 2.2 billion, but obviously it came in about 2.4 billion in this last year from a kind of claims perspective. So there's a couple of things that need to kind of play out in a new COVID world. But again, still one I like from a long-term perspective, but I feel like they need to get a little bit of kind of earnings momentum in the next little bit.
Right, and then finally, Martin, Steinhoff impressing its shareholders today, reporting earnings that were higher by about 15% for that 9-month reporting period. I mean, they're still marred in a lot of trouble, litigation and the like, despite there are settlements that are in the pipeline. Your thoughts on what they released, and really just also a forward-looking view on the Steinhoff stock?
So Steinhoff is a difficult one. I mean, obviously, we all know what happened a few years ago, and I think it's a real overhang. So for me, as a kind of fundamental investor, it's very difficult for me to invest my clients' money or even my own money into a business where I'm not 100% sure of what the kind of liabilities look like or what's going to be left over after kind of people take what they need to. So it's a very difficult one. I think you see people on both ends of the spectrum kind of saying there's optionality in this business. Once kind of everything clears, you can make money. And then on the other side of things, you've also got people shorting the business and trying to make money when the share price goes down. I mean, it's the 7th most shorted stock in South Africa at the moment. So it's one that I'm very, very happy to sit on the sidelines for, regardless of kind of what revenue looks like. until I get a clear picture of what the actual financials are and what the balance sheet actually looks like, I'm very, very happy to sit on the sidelines.
Martin Smith, as always, many thanks for your time. He's a portfolio manager at eNCA Capital.